As I've studied the field, I think up until the last few years, you could roughly break the history of innovation into 3 eras. Back until about 1900, it's what I would call the era of the lone inventor. It was a time when an individual really had all the tools at their disposal to innovate. They could go and figure out and tinker in their labs and come up with something like the incandescent light bulb. The hallmark of this era is you can attach an innovation to an individual. So I show you a light bulb. Who do you think of? Edison. If I were to show you a printing press, you might think of Gutenberg. If I were to show you a cotton gin, you would think of Whitney, and on and on and on. Innovation was accessible to the individual. Yes, they would form companies to ultimately scale their idea, but the magic rested with the individual. Well, the Industrial Revolution happened, and innovation began to get more expensive, began to get more complicated. It moved from the individual into the corporation. During the second era of innovation, corporations were still open enough to encourage world-changing innovation. So you had Procter Gamble come up with Tide and Crest and Pampers. You had IBM and System 360, Lockheed Martin come up with all sorts of game-changing innovations. DuPont and the miracle molecules, and on and on and on. The magic happened inside of companies. Around the 1950s and 1960s, well, this all began to change. Individuals began to get a bit more restless. Corporations at the same time were getting more bureaucratic, were ossifying. Individuals began to eject out of companies, form with like-minded groups of rebels, and go and take on their corporate parents. Now, innovation was still expensive, so they needed someone to finance them. So you have the rise of the era of the venture-backed startup. And you might be saying at this point, era of the venture capitalist, that sounds great. It's so easy to start something up. Let me just go and do that. Who wants to be inside a great big company? The reality is life is no rosier for a startup. 75%. That's the percent of companies on the S&P 500 that will not be there in 15 years. 75% is the percent of venture capital-backed startups, the creme de la creme, who never return a cent to their investors, let alone have any kind of big, booming liquidity event. 75%. It's tough out there for a startup as well. Some of the behaviors that used to make it easy for a startup to compete against large companies are more short-term focused and so on, characterize startups as well. The second a startup gets a whiff of success, well, then the race is on. There are no barriers to entry, and it's really, really tough. Big companies, however, have already gone through all of that. They have built up scale advantages. They can do things that few other companies in the world can do. And there's a small but growing number of companies that are figuring out how to do both. Leverage difficult to replicate assets and act just entrepreneurially enough that they can unleash massive impact in markets that matter to them. This is the era of innovation we're entering into, the era of the corporate catalyst, where someone like a Keen Monson or Yuri Jain at Unilever or Nick Muzaka at Syngenta can find ways to harness what's inside and what's outside the organization and do things that no entrepreneur in the world could truly dream of.